Welcome to the ETMarkets Roundtable on the Central Bank Digital Currency, CBDC for short. Let me begin by introducing the participants. Charles Dussey is Managing Director for Asia Pac at Consensus, a leading global blockchain and digital assets company. Pramod Rao is Group General Counsel at ICICI Bank, where he provides strategic oversight to the legal function for the ICICI Group. Sankarson Banerjee, short Shanky, is the Chief Information Officer at RBI Bank and formerly CIO at NSE. Shehnaz Ahmed is a Senior Resident Fellow and Lead FinTech at the Vidhi Center for Legal Policy. She works on emerging areas of policy and law on the intersection of finance, technology, and inclusion. Lastly, myself, I am involved with a venture capital firm called Cornerstone Venture Partners, prior to which I was Director General of the Bombay Chamber of Commerce for 5 years, and earlier worked with Tata Consultancy Services for over 35 years. Let me also mention, before we move on to the next part, that GIFT, or Global Impact of FinTech, has provided us knowledge support for this session. The context. This is a roundtable panel discussion on central bank digital currency organized by ETMarkets. And I must mention, globally, governments and central banks have stepped up efforts to examine the use of such digital country currency. In India as well, a bill is likely to be included shortly because it is waiting listing for parliamentary discussion and would cover this subject as well and thereafter become law, which is why this discussion appears to be very topical and somewhat timely. In a keynote address on the 22nd of July 21 at the Vidhi Center for Legal Policy, the Deputy Governor, Reserve Bank of India, Sri Ravi Shankar, made a very strategic point, and I quote, with some modification, quote, "Except for currency notes, all other uses of paper in the modern financial system, be it bonds, securities, transactions, communications, correspondence, or messaging, have now been replaced by their corresponding digital and electronic versions." I think this was a very telling opening comment of the Deputy Governor RBI. In fact, even on currency notes, in October 2020, the Bahamas, with the sand dollar, became the first central bank digital currency in the world to go beyond the pilot stage and achieve an official nationwide launch. The sand dollar is the first ever nationwide central bank digital currency in the world. Subsequent to this, the Eastern Caribbean Central Bank, ECCB, launched its digital currency Dcash in March 2021 in 4 out of 8 member states: Grenada, St. Lucia, Antigua, St. Kitts and Nevis. This became the world's first retail central bank digital currency to be publicly issued within a formal currency union. A recent Bank of International Settlement survey found 86% of surveyed central banks were interested in CBDC. As an example of 80 countries for which I've been able to gather data, reference Atlantic Council, in different stages. At launch were 5, pilots were about 15, development were also about 15 or 16, research were 30 plus, inactive were 10, cancelled were 2, and miscellaneous or others were 4. The Indian scenario. The cryptocurrency and regulation of official digital currency 2021 narrowly missed out being tabled during the monsoon session of Parliament in July and August. It is conjectured that the cryptocurrency bill's primary aim is to create an official digital currency for India issued by the Reserve Bank of India and possibly also constrain the use of private cryptocurrencies in India, subject to some exceptions. The Governor RBI, Shri Shaktikanta Das, in August 21, mentioned that there were major concerns around private cryptocurrency traded from the point of view of financial stability. These have been conveyed to the government and are under consideration. And some policy action is expected from the government side and these may form part of the bill referred to earlier. The stage seems set to what promises to be a transformational shift towards the use of digital currency in India, namely CBDC. I'm sure the eminent panel here at this roundtable will provide a significant perspective of CBDC globally and in India over the next hour. The first question, the first roundtable relates to both generic and essentially global responses. So I'll begin by asking Charles the first question. Charles, as an expert in digital currency in general, what would you say are key central bank digital currency drivers globally from the top three standpoint amongst the laundry list available? Cash reduction, anti-money laundering, financial inclusion, efficient payments, cross-border transactions, crypto coin threats, monetary policy, etc., etc., etc. And could you relate that to countries such as China or any other that you would choose to?
Absolutely. Thank you, Vijay. Thank you for, for having me today. I think really what is triggering a lot of activities in central banks globally when it comes to CBDCs is really the growing power of tech companies. So I think really one of the trigger of a lot of activities within central banks was what we call the Facebook coin, Libra, now called Novi. And that was the first time the central banks was kind of challenged by tech companies with very, very large base of users. And those companies starting to express their will to start their own currencies. And it has triggered a lot of activity, and it has really triggered and accelerated the pace of the agenda at central banks for CBDCs. And now, given this kind of warning from the private sector, I think what central banks are really worried about is that global currencies are moving to new rails. These new rails are blockchain based. And if your currency is not on these rails, your currency is at risk of being a little bit left behind, less relevant, and probably not getting the same kind of attraction for new users. So there is really a shift of paradigm. There is a shift of infrastructure moving from SWIFT and moving from the legacy systems, whatever they are, should it be domestically or globally. And it really triggers a lot of actions from the central banks to make sure that currency will be the currency of choice. Because it will be on the right rails and with the right format. So beyond financial inclusion and many other topics, I think what really is triggering action is this, because you can always do financial inclusion and cashless societies with purely digital, but you are not changing yet all your infrastructure. But if your competitors in the global scene are moving to new kind of money, and their money is more relevant, faster, more efficient, programmable, if their money is smarter than your money, it becomes a very big challenge for a nation.
Thank you, Charles. I'd like to hear comments from the other panelists on the same question and what Charles said.
A quick comment. Money, even physical money, you should not underestimate how smart it is. And the uses of it can be quite innovative and quite interesting. And we should be careful of understanding those uses while we go digital. Physical money and digital money are not used in the same way. And this is something that we've done a bit of a surveying on in one of my past jobs. And there are challenges to converting all the use cases. Not just technology adoption challenges, but challenges in actually in enabling or disabling some of the use cases itself.
Thank you. Pramod, you were saying something?
I was only going to add to what Charles said. I think indeed the central banks need to and are looking at introducing digital currencies for very many reasons. But I think primarily it is about seeing and catering to the demand, I think, that cryptocurrencies have themselves generated, whether the interest, whether, how it is programmable, how transactions can be immutable and so on. So I think the central banks recognize that and at some level want to be able to make sure that what they offer addresses all of these needs and requirements too. And I think that's driving both the, the various stages, as you said, that central banks are at. So indeed, quite a good juncture to, sort of.
Okay. That leaves you, Shehnaz. You have anything to add to what we've just heard?
Yeah, so I think Charles has actually talked about a lot correctly in terms of what's happening globally, in terms of our research also when we looked at countries in terms of the policy motivations. I think what we noted was that policy motivations essentially depended on the stage of economic development of a country, plus also the breadth and the depth of the financial sector. So you will see advanced economies looking at, CBDC to respond to the decline in the usage of cash, or maybe for the purposes of increasing the efficiency of their payments market. Whereas you will see emerging economies like Bahamas looking at financial inclusion, I think, as a major policy motivation for issuing CBDC. So yeah, that's what I wanted to add.
Thank you. That sort of triggers off the next question that I have, since we finished this round, to Pramod. And that question is this: in the developing world, a key driver has to be reducing cash usage. I mentioned 54% cash usage in India. How would cash anonymity, which is an important requirement for cash usage, be addressed in CBDC through legal or technological means, especially when government interests are involved? And any inputs you have on overseas examples would also be useful. For example, Switzerland or any other country. Pramod.
Thanks, Vijay. I think the way I would put it is in two respects. I think one, that by design, if indeed anonymity could be provided, and technologically, these things are possible, to me, that would be the most desired state when a CBDC is introduced. Clearly, when we talk about digital payments, and you made the right, mention of where we are as a country, my belief again is that those payments have been taking place at very, very cheap rates. To do a UPI transaction or to do a RTGS, NEFT in our country, actually is something which many developed countries themselves have not caught up with. So to me, I think we have to juxtapose that we have made rapid strides in payments, along with what we can then do with CBDCs. To me, the government or the central bank will need to be mindful that if it is going to leave a trail, if it is indeed going to be, possible to verify or understand how the currency changed hands, it may actually lead to very little adoption, unless people are doing it purely in, I would say the enterprise space or the wholesale space, where there is no such concern. But I think individuals value their privacy. And part of that privacy is that you can use anonymity when you do cash transactions, which if CBDC seek to challenge or seek to replace, should cater to.
Okay, panelists, anybody wants to add?
I just had, sorry, go ahead.
Go ahead, Shanky, and then Shehnaz.
Okay. No, I'm the skeptic on this panel. I feel that people are taking replacement for cash as a goal rather than seeing why cash should be replaced. Cash is actually a very low cost, low technology, efficient way of transacting financial business, especially at the retail scale. And it is in fact a lot more efficient than many digital technologies are. This 2% that credit cards charge is all digital. There's no cash involved there. And a lot of extra overhead, you have to have a smartphone, you have to have this, you have to have that, is involved in a digital transaction, which adds to making it much more expensive than a cash transaction. And therefore, we should not start with the assumption that cashlessness is a viable goal, is a valid goal. Why is it a valid goal?
Okay.
Yeah.
Charles, do you have anything to say on that subject? I'm sorry, Shehnaz, you wanted to say something.
So I just, Sure. No, I just wanted to add that I personally do not think full anonymity is something that is achievable when we talk about CBDC, because I think regulators will have to balance, the concerns around privacy. Plus, I think also because CBDC may become a sort of a mechanism to further money laundering or illicit financing. So we need to have efficient safeguards in place. So I think the question will be more about how do we ensure privacy of users in the CBDC ecosystem, as opposed to like trying to create an anonymous CBDC sort of a framework.
So again, if I may add, anonymity, as Pramod was saying, has to be by design. And I'm very confident that central banks will not want to design it as anonymous. Anonymity of cash is not a feature. It is a kind of a side effect. It is because when cash was invented, you couldn't track it. I think, and I've had conversations with RBI and others. I don't think central banks are looking at making cash transactions or digital transactions anonymous. In fact, the fact that they're traceable is a very big feature for a digital currency. Now, there are, of course, advantages to it in terms of anti-money laundering and this and that, and there are certain privacy violations that will follow. But I don't think any government is trying to make it anonymous.
Sanki, I really like your comment on cash is very efficient and is really cheap to manage. And I just want, for the sake of the conversation, to kind of counter argument your idea and invite everyone to look at what digital currencies have brought to China, not yet as CBDCs, but as just digital payment, and how much the farmers from deep inside China have been able to start their e-commerce activities. They have been able to receive payment directly from many people, and it would not be possible with paper cash. With paper cash, they would have to sell their vegetables at the local market, and that would be just only so much. So I think this digital payment industry have grown very massively in China, and it has really helped some countries where there is some disparity between the different regions of economic development, to help the regions of those countries to kind of catch up. So that's what I wanted to say here. And maybe to come back to the privacy, I'm also clearly aligned with you, Sanki. I don't think any government will do a purely decentralized, purely anonymous CBDCs. We have also to be aware of how much anonymous our digital payment today. If you are using a credit card or a payment or anything like this, which is using a centralized entity, at any time your regulators of the police can ask your payment providers and say, oh, maybe Charles was doing something wrong. We would like to get all the details. And in this case, we get all the details. So many of the users everywhere in the world are always happy to kind of trade their anonymity just for the comfort. And it varies really a lot depending where you are in the world. In China, people have a very different relationship with their personal data. In some countries, you will have very strict privacy data regulation in place, which will really kind of frame the work of central banks, and they will have no choice but to follow these privacy regulations. Sometimes the market is very sensible to it. Sometimes the market is saying, if you give me just more comfort or more speed or lower fees, I'm happy to leave some of my privacy on the table. So it's honestly a very hard question for most of the regulators, and it's always adapted to the local privacy regulations where depending where they are and how mature they are. But after experimenting CBDC technology, central banks usually have to do a new chapter of work, which is a big piece of work when it comes to privacy, to make sure they respect the regulation in place in their countries.
Yeah, I must interject there. I didn't mean zero cash. I meant cashless society does not mean that you replace all cash with all digital. That is the part I object to. But it doesn't also mean that I replace all digital with all cash. There is a lot of benefit to, especially on the wholesale side, to digital payments. But on the retail side, both should coexist. There is a significant value, especially at the lower end of the value chain, to cash. And especially in the financial inclusion space, where devices can be expensive, electricity can be expensive, Digital failure rates are quite high compared to cash. And cash has no failure rate. And there are disadvantages, the cost of carrying cash, the problems of carrying bulk cash. On the wholesale side, the benefits tend to be quite large, but that has nothing to do with central bank digital currency. That is just digital transaction of regular. It's just a recording of a transaction. It is not actually the transfer of currency that is the challenge.
If I can quickly, come in, I think the way I would sort of say is, for instance, privacy safeguards, right? The repository of where the CBDT transaction data is kept, if that is indeed insulated from being accessed unless with valid court orders, unless with valid police which can access under normal circumstances of bank records, probably those kind of safeguards may need to be amplified and put in place by a central bank. Because to me, what would hinder is really the adoption if people fear for their privacy. And at some level, I think they have, the central bank owes it to itself if they want to have a successful launch to be able to address those concerns. I think that is how I would put it. So there is indeed a techno-legal approach which can be adopted, which balances that interest, which the state will have of wanting to be able to trace, to be able to make sure that it's not misused, but at the same time giving the citizenry assurance that indeed it's not going to be every day that somebody manages to look at it. So I think that's how I would.
Thank you, Pramod. I think we will close the second question. Let me get to the third and the fourth. And this one to you, Shanky. The question is, what are the key technologies that are used in CBDC, blockchain, other distributed ledger technologies, centralized, etc., globally? And do these technologies permit offline transactions? Any input on global experiences in this regard? Shanky.
So the first thing is, blockchain is the only successful digital ledger technology that we have. I mean, there have been others proposed over time, but though they have certain advantages, nobody has quite caught on at any scale other than blockchain. And therefore, blockchain and DLT have become kind of synonymous. India is trying central bank digital currency using blockchain, but others are not. Like the China digital renminbi is not based on blockchain. And given that distributed may not be, is not necessary when you have a central bank, many, I guess, will shy away from the blockchain approach, which has a significant amount of algorithmic complexity. There's a constant encryption overhead. There's a lot of extra things that have to be done to keep a blockchain working correctly, which is quite against the central approach. And so I suspect many banks will come to more traditional ledger technologies as opposed to the distributed ledger. The regular ledgers are the centralized ledgers, which is what actually all currency is today. There is a centralized set of serial numbers that RBI keeps. So that is going to be, I think that centralized banks will come to regular ledger technology as the option and not blockchain. On the other hand, I think alternatively, many smaller economies will indeed adopt blockchain because it's readily available as a ready setup. So the Bahamas or Estonia, I think they will go one shot with blockchain as opposed to trying to build out a central unified countrywide ledger. That's my opinion. The challenges I think that will happen is that, like any technology, like we've seen with pretty much any launch of any major portal in the world, in whether it's the healthcare portal in the US or the income tax portal in India, that people are bound to get it wrong. And when you get it wrong in technology terms, in money, it's always going to be a bit of a shakeup. So I have a worry there that something that goes wrong when your fundamental savings and balances are involved can cause quite a bit of headache.
Thank you. Any of the other panelists? Charles? On the question I asked Shanky, for which Pramod gave a response. Shehnaz? Okay. That's fine. That sort of gives us a view on blockchain, at least from a few of the players on the panel. Let me ask the fourth question of round one to Shehnaz. In the CBDC world, how will the roles of central bank, commercial bank, NBFCs, and other intermediaries change? And how may this impact lending and credit availability? Do you have any country pointers in this regard?
So I think when it comes to CBDC issuance, I think when central banks are assessing the financial implications of it, one of the most important factors is the disintermediation of the banking sector. I think most central banks that we have also reviewed have talked about how there is a possibility of a CBDC moving away bank deposits, or how it may in fact sometimes accelerate bank runs also. So that there is definitely a sort of a concern around that when CBDC is issued, if it is more attractive, people may want to kind of shift their deposits to CBDC funds, which may in fact have an impact on banking deposits, thereby constricting banks' ability to lend. Having said that, I think a lot of countries are also looking at how CBDC may be designed in a manner which might be able to kind of deal with such apprehensions. Like, for instance, if we have whether CBDC should be interest bearing or not interest bearing. Should CBDC funds, there should be a limit on the CBDC funds in terms of convertibility of CBDC funds into other forms of money. So I think there are a lot of these questions and issues that central banks are wondering in terms of how to reduce. I mean, there is a fear, but there are also ways to design perhaps CBDC in which case the fears or maybe allayed or addressed.
Okay. Comments, please.
I would sort of, if I could jump in, Vijay, I think the way I would look at it is that central banks are necessarily both the developers of the financial markets and taking it forward, but equally guardians of those who are regulated by it. To me, banks, NBFCs, and so on all comprise the universe that Reserve Bank actually safeguards, right? The stability is provided by how we are prudently regulated and so on. So I think that will bear an important mindset in terms of how they roll out CBDC. To me, there will be, and there are both talks about, for instance, how government securities could be held directly with the central bank, or CBDC itself might actually disintermediate banks. My view is the opposite. My belief is that indeed they will co-opt the entire system if they want to take it forward. It will otherwise have a destabilizing effect, and which is not necessarily what any central bank desires. Of course, how technologically is it feasible, whether it will be the equivalent of wallets being maintained by banks and reflected in the central bank's registry for CBDC and so on, those remain to be seen. But I suspect the pilot that the governor has mentioned will probably test out these elements too.
So as a banker, I have a somewhat similar opinion to Pramod. One is banks, banks have two core functions today. Well, there are many functions, but two very big ones. One is the aggregation of deposits, and therefore corresponding to that, the lending of it. And the second is the management of risk around that lending. The management of risk is not challenged in the central bank, the CBFC. That is going to remain. Somebody has to manage the risk of lending, and that the central bank will not do. Some intermediary has to do. And obviously, the banks are by far the best place to do that risk management on the lending side of various kinds. There are NBFCs that do it. There are other entities that do it. But banks are by far the most mature and the most well-placed to do it. Therefore, our bigger challenge is the aggregation of deposits. Now, one of the roles banks has traditionally played in the digital world is I take cash deposits and convert it into electronic tokens so that I can transfer it from place to place. Your bank account is essentially a way to transfer money. So a lot of banks, for instance, they don't earn very much from the actual account or even the lending of that money in that account. They earn most of their money from fees, from the transaction as such. And that is severely challenged. For instance, credit card income is a big chunk of every bank's income. If digital currency happens, and or even UPI for that matter happens universally, which is a tokenized system, kind of similar to a digital currency, it is going to severely challenge some of the bank's income streams, especially where it covers the aggregation And aggregation is one of those things that it is not quite clear how banking will survive the aggregation problem. We will have to figure out how to offer, we still have to aggregate deposits so that we can give loans. But there are other ways of giving loans. I mean, NBFCs, for instance, give loans through equity funding or loans or wholesale lending and so on. So there are other ways to aggregate risk for lending without savings. But savings, the banks are built on the fact that they can do savings. They're the only people that can do savings, and therefore the only people that can aggregate loans in this particular manner. And that challenge is what banks will have to face. Temporarily, central banks will probably help us survive this because they don't want banks to go bust. They don't certainly want a very large scale shake up of a system that people have been relying on for a few hundred years. But that's a transition problem. At some point, we'll have to come to face with the fact that if everybody has digital currency directly in a digital wallet, there is no particular value to the aggregation, to having a bank account. And we'll see how that plays out.
Thank you, Frankie. Charles, Chinese experience on the same question, please.
The Chinese CBDC is still fairly new. What we see in the region where we work with teams at Consensus on different CBDC projects is the central banks wants to empower the commercial banks. So there is always a narrative like the central banks will disintermediate a lot of the business line, but effectively you don't see any central banks doing this. Even though it's an optionality, they don't really go for it because they just want to keep their banks, but they want to stimulate their banks. The reality is that in some markets, the banks are either partially owned by the state or very old institutions which have not delivered on innovation as much as they should have. And they are having some of their markets being eaten by fintechs. And I guess one of the options for central banks is to really make sure that their currency become a very innovative platform and very inclusive platform. And central banks does not deal only with the traditional commercial banks as before, but kind of invite also around the table people which will get a license and follow the same rules, but which will come with probably a less burdensome infrastructure around them. So I guess there is really a strong agenda here from many central banks to make sure that they don't let the fintech going into simple kind of license and eating a lot of the business, but bringing the fintech in and stimulating some of the banks which sometimes are not fast enough in terms of innovation. And the economy is being more and more global. It's easy for you to get potentially borrowing and lending from entities overseas if you're running an e-commerce business or anything like this. So it's just important to make sure that your ecosystem remain highly competitive and not so much into the end of one part of your banking sector only. And what I predict is that with the infrastructure being modified to a blockchain-based infrastructure, a lot of the borrowing and lending, a lot of the FX activities will be essentially run by software only, and possibly by public infrastructure run by countries or run by central banks. And we will probably see within the next 18 months, the first banks in the US, which will be running with blockchain as a back end, running with stablecoin, running with CBDCs. And one thing, I don't know if it applies in India or not. I'm not familiar enough with the latest of the regulatory conversation over there. But what we will see in some other part of the world is a challenge and a competition between the privately issued stablecoin by regulated entities. So you start to see some banks, for example, in Singapore with Project Partior, bringing together Temasek, JP Morgan, and DBS. Those banks starting to issue or will starting to issue soon stable coins, so US dollar and Singapore dollar, which will be issued by a bank, and it will be some kind of branded money. I don't know if this will be authorized in India, but in some markets this will be authorized, and we will see probably the private sector money innovating and being deployed faster than CBDCs, but eventually CBDCs catching up. So it's important also as a central banker to think, how will you compete with a privately issued money if this applies to your domestic market? And there is two advantages which central bank digital currencies have against stablecoins issued by private entities. Is number one, potentially having a KYC linked with the golden source of truth, which is like your passport or your identity card. Being a government money, you can connect the government money with your government identity and making the KYC way cheaper to manage for fintechs, way cheaper to manage for banks. The AML being also way cheaper to manage for all your industry. And this is a big burden for many of the regulated entities. And the other part is sometimes controversial, but in my opinion could be having a good market fit, would be having CBDCs, which enables you to automatically calculate your VAT and pay your VAT. So you can think, oh my God, so some people wants to pay cash. So I know cash is popular in many countries, but many people are happy to pay their tax also. And you could imagine that in some future, in some countries, if you pay with the CBDCs, essentially the VAT is automatically paid to everyone. And it gives you a discount. It just lowers the cost for the SMEs of managing this kind of paperwork and administrative duties. So there is two ways to look at this kind of features, and the market will tell us where it should sit.
Thank you, Charles. Similar to smart contracts, I suppose. I think what's happening is I have extended the time for round one. We are clearly going to have only 2 rounds, but I'm going to stop round one, which is the global round, and come back to the Indian side. And back again, except this time I'll change the sequence. I will start with Shehnaz. Shehnaz, you made a point earlier, and I want to take you up on that. Given the need for financial inclusion in India, where a very large set of population do not have bank accounts at all, do you see CBDC playing a key role? I think you mentioned yes. But in order to do this, Shanky made a point. Is there or will there be a need for minimum infrastructure for this on the hands of the recipient? For example, is a mobile phone required? It's incidental that mobile phone would be required for digital transactions other than CBDC as well. But having said that, what is the minimum infrastructure that will be needed? And somewhere the question of offline transactions, which I had asked, but needs to be addressed as well. Over to you, Shehnaz.
Sure, thank you. I definitely financial inclusion will be an important policy motivation, but I will still say that it cannot be the sole reason for India to issue a CBDC, because for CBDC will perhaps be one of the ways in which financial inclusion can be promoted in India, along with different other payment solutions that exist. Now, insofar as obviously infrastructure is concerned, and especially from a legally, as a lawyer, for me, I have to bring this point out, because when we talk about CBDC, one of the important features of CBDC is legal tender. Now, considering that, when you usually give legal tender status to a kind of currency that can be accepted or can be used by everyone. So the question of fairness does arise. Can CBDC, which requires some sort of an infrastructure, like you will have to have people who have access to, perhaps, as you said, smartphones or mobile phones or some digital infrastructure, will it be correct to kind of give a sort of a legal tender status to CBDC? So those legal questions are going to get tricky when we think about CBDC from a financial inclusion perspective. Having said that, I do think that definitely for India, this can be one of the ways, one of the policy motivations. For that, obviously, we will need to kind of have, we will need to ensure that there is adequate digital infrastructure, something that we have been kind of trying to perhaps grapple with. Insofar as offline technologies is concerned, I think there are 2 countries. I do remember EU as well as I think Japan, in their consultation papers, they have specifically talked about how, if at all CBDC is being used for a financial inclusion perspective, you will have to think about how CBDC may be used. You may have to think about offline payment solutions. Of course, what shape or form it will take, it's not something that I don't really have a use case for that. Definitely one way to kind of promote CBDC's financial inclusion. But yes, there are also legal questions that will come up when we think about this.
Okay, thank you. Comments, please. Shanky.
So, go ahead.
I spent some time, obviously, as part of the bank's initiatives and some of our other initiatives, looking at financial inclusion quite closely. Obviously, CBDC is a version of digital currency. And in China, in Kenya with M-Pesa, there has been substantial increase in financial inclusion because of digital means. But there also has been a new set of digitally excluded customers. China has this case where somebody was denied life insurance, health insurance, because they did not have an app that had the health code. In India, we've had trouble where people did not have more smartphones, so they couldn't get their vaccines and they had to rely on other people. So those challenges will have to be addressed. India's financial inclusion actually is a slightly different problem. Why don't Indians have bank accounts? Because it requires you to have a know your customer. It requires you to have an identity. And a large chunk of Indians have a very hard time establishing identities. So Aadhaar is their biometric, but address identity is always a challenge. And this will continue to be a challenge unless you allow anonymous means. If you allow anonymous digital currency, you will see financial inclusion, which is what, let's say, a VPay or an M-Pesa is. VPay or M-Pesa has no connection with identity. It is a pure token that you can exchange. Nobody cares where the token came from, who owned it, nothing. But if you attach identity to it, then you will have a challenge with financial inclusion, because in India, a large chunk have only biometric and nothing else. No permanent address, nothing else that you think of as identity. And that problem will continue to remain. That has nothing to do with technology. People are migrants. People don't have permanent places to live. People don't have establishment as such that one can point to as the KYC central.
I think that's a good point, and I'm going to ask Charles, what is the situation in China? I'm sure you have, shall I say, not very wealthy people in China as well, and how do they adopt their central currency, and how do they address this issue of address? Is that a requirement? Is that not a requirement for a central currency?
I think that's a good point from Sanki here. And we have to think of these topics in many different contexts. To the best of my knowledge, the Chinese digital currency is linked to an address, but it's also linked to some extent to some kind of social identity. So you've got like your identity number, which is linked or not to a physical address. And then there is also other components of your identity, such as your social media life, such as your employee number. And this way you can agree as a government. And I think the Chinese have enough data to kind of process to validate an identity, not only from your postal address, but being able to kind of align different components of the life of an individual and make sure that yes, this individual is registered with the government, should it be by biometrics or facial kind of identity points. This individual also has a job, registered with a company, is being paid a salary, and from his social media life, we can see it's not a ghost coming from nowhere. So it's probably a good opportunity also for all the banking sector in general, from the central banks to the regulators and the banks in general, to kind of challenge this whole KYC. Keeping the components and the mission of the KYC, but executing on the KYC by new means to make sure it's inclusive enough.
So I must interject there. VPay, Alipay, and M-Pesa, they don't require identity. I mean, they don't require address or KYC. They just require an account. Mm-hmm. And you as a tourist also can open a VPay account and nobody will question it. And you can start transacting on it. The central government the currency that came out in April 2020, that is trying to do a harder KYC. And in India also, identity per se is not a problem, because everybody has Aadhaar. The problem is proving the identity digitally again and again. That infrastructure is quite complicated to do. So if you have to do a proof of identity or KYC for every transaction, that is going to be a severe challenge. And that's primarily the reason why people transact in cash in the smaller markets or even within cities. Even within our own branches, KYC, that biometric doesn't work all the time. So then we have to offer the option. And you've seen central banks going the other way. So Pennsylvania, for instance, sued, I think it's a greengrocer or somebody, because that person was refusing to accept cash. And there have been cases in Stockholm, in China, in other places where the government has pushed back and said you must accept cash because you are disadvantaging the customers who can't easily prove their identity, and they still have right to those services.
So maybe there is options to accept a payment below a certain amount within 1 year in cash without too much identity being revealed. So it might be a compromise which can be considered by some central banks. Let's say you can exchange every week, let's say $500 without having too much of identity being revealed. But if you want to transact more, or if you are reaching like 50K equivalent at the end of the year, or whatever the number is being picked, there is an additional level. So this is what we call in some places of the world tiered KYC. So you've got different tiers of KYC. So the first one is you give me your fingerprints, maybe Aadhaar in India, and then if you want to transact more, we're going to ask you to know more because you start to transact a larger amount of money. So it might be something to explore.
Yeah, so far that's been applied to channels, but like Shehnaz pointed out, making it legal,
I'm going to interject.
Will apply it everywhere.
Pramod and Shehnaz, any quick reaction? Otherwise, I'll ask the next question to Shanky himself, the primary question. But before that,
I'll just a quick sort of response more around inclusion. I think our own payment system, UPI in particular, has actually transcended the smartphones. So today people can transact in UPI using even a feature phone with just certain keys and so on. So my challenge to the technologists would be to say that can a CBDC be similarly harnessed? And again, in the country, we do have the Jam Trinity, which brought a whole set of people who were unbanked into the formal sector. Whether that again can be anchored for CBDCs too.
Good point. You're saying can a feature phone have the CBDC feature? Anyway, Shehnaz?
No, I think one point which might be interesting to note is how the newly issued e-rupee works, in the CBDC ecosystem. Perhaps that's something that we might want to kind of look at going forward.
Okay. Next question, primary question to Shanky. In the Indian CBDC context, if it were to come true, would it be possible to track CBDC in circulation near real time, subject to the offline discussion we had earlier? If so, do you think the whole business of counterfeiting will see a bit of a metamorphosis?
So counterfeiting, especially if you use DLT, the distributed ledger, is anyway quite difficult. Even in the Bitcoin world, without all this supervision, it's pretty hard to counterfeit. I mean, nobody has found a successful way. They don't really have an easy option to counterfeit Bitcoins as well. So I suspect digital currencies, if adopted, will indeed crack down, a very technologically sound way to prevent counterfeiting. At least the standard kind of counterfeiting, the counterfeiting we understand today. I suspect counterfeiters will find other ways to fake the system. Because that's how crime never goes down, it just changes shape. However, the cost of DLT is quite high. The cost of constant real near-time circulation, especially in a country the size of India, is going to be quite expensive in compute power. And I am not sure that will be feasible. And therefore, there will be gaps there.
Okay.
I guess we will see, and I agree with you, Sanky. There will be no switch from over 1 week to all CBDCs. We're going to keep having the different type of monies living side by side, and some of them fading away. But you want to remain inclusive. You want to keep give the choice to people. But slowly, the system will start to tell you, okay, if you want to pay in cash, we're going to need to do some additional check. It's going to cost you more expensive in fees than if you pay in digital currencies. So I think the market will also kind of clean up the currency options and the currency menu. as it did for many years. People don't use shells or salt to pay anymore. People don't pay in gold much anymore neither, because processing a payment in gold is just cumbersome. So the different type of money will keep living side by side, and slowly kind of fading away along the way.
Okay. Anyone else on that question or comments? Okay. Let me ask.
My only thing would be, instead of, sorry, Vijay, on counterfeiting, maybe, what Shanky described is the correct position, but equally we should recognize that there are other digital challenges, right? Those of lost keys to the wallet, those of, hacking and so on that can arise. So it may just be that the persons holding the CBDC may face newer types of problems, which equally we need to think about.
Yeah, I was going to ask you, what would a raid imply in this business, but we'll park that question. I'm going to ask the primary question of Pramod. Can you talk a little bit about the impending cryptocurrency and regulation of official digital currency bill 2021? Will it result in CBDC promotion for both retail and wholesale, or as Shanky said, wholesale first, retail later, or the other way around? And is it likely to limit crypto coin use, either in terms of assets or exchange or any other way? Over to you, sir.
Thank you, Vijay. I think, we are moving into a realm of speculation, because India has now made 2 attempts at bringing that bill. And in both those bills, I think indeed the private cryptocurrency was sort of getting outlawed, if you will. Indeed, the RBI was getting empowered to issue what is described in that as the official digital currency. I think, again, there have been recent news reports that maybe the government might be doing a rethink. So I wouldn't want to, sort of move into that realm of speculation. But one thing which did strike me, and maybe Charles or Shehnaz may also have a view on it, is really about whether the Gresham's law is going to compel the outlawing of private cryptocurrency anyway. And which is the theory that bad money drives out good money, and people tend to hoard the good money. And if CBDC is going to be that good money, which is backed by the central bank's assurance and so on, then, well, people, sort of hoard it and rather use what is private cryptocurrencies. And that is the reason that the government may necessarily have to outlaw them, or, to curb at least their use, so that it's not in competition at all.
Thank you. Anyone else commenting on Pramod's question?
So I would just like to kind of comment here, especially on the bill insofar as CBDC is concerned. I think it's too premature to talk about a legislative framework for CBDC, because I think we are not even sure in terms of why we are issuing a CBDC, the design question. So I think that the legislative part becomes a secondary issue. At the most, the bill can only empower RBI to issue a CBDC. Even then, I think there are a lot of questions whether we want to issue an account-based CBDC or a token-based CBDC. So the amendments will have to kind of factor that into place, and I don't think we have taken a call on that as of now. So that's one thing. Insofar as I think the cryptocurrency regulations is concerned, I think it's a positive development that we are perhaps talking about regulating it. I don't think the issuance of CBDC itself might currently, the way the Indian crypto market is working, where we are looking at it more from a type of an asset class as opposed to like a medium of exchange. I think till the time we are looking at it from that perspective, perhaps the issuance of CBDC may not really have that much of an impact on the crypto market as it currently stands. However, I think globally, the issuance of CBDC on stable coins is something that might be worth looking out for.
Anyone else? Shanky, Charles?
So I think, something like a VPay or M-Pesa or even a Geo Payments a private wallet is already an alternate currency that, wire wallets in India, because it's pretty hard to pay small transactions through banks. There are lots of checks and balances. So people put money into a wallet so that they can bypass all these controls. And there is a certain amount of that going on. In the VPay world, that is quite large. So China is starting to get worried and therefore forcing people off that world after a certain size. And I think we will continue to see that private wallets will be forced to remain small, private exchange mechanisms. I don't think they'll be outlawed because that's too broad, but I do think they'll be forced to remain within a certain limit, after which you have to use legal tender.
Okay, got that. I think we are now at the last question on the round, and this I'm going to pose to Charles as he comes in from outside. It is an Indian question, so there may be a little bit of dichotomy here, but I'd like to pose it to him given his experience in Thailand, with Thailand at least, and China and other Southeast Asian countries. Would the infrastructure, it's been alluded to by Shanky earlier, available across India, cloud, network, platforms, end devices, support ubiquitous CBDC, especially when transaction volumes go up by orders of magnitude, if at all cash usage comes in on the retail side? If not, what is required to get us there? Your experience on Southeast Asia, because you've dealt with different economies of different characteristics.
Thank you. That's a very important question here. I guess when you make your money natively digital, you can start to use different type of infrastructure. So if your country is able to move data in most of the territory, you should be able to reach people and let them transact with your currency. And I think the type of infrastructure will kind of overlap in some case between the data infrastructure for mobile phone companies and internet service providers and the banking purely. And what we see in many countries is the legacy kind of infrastructure from banks from many years ago, where there was branches and a network of branches, obviously have been fading away for mobile phone usage. And if you can start to bank already with your mobile phone all over India, there is no reason for you not to have the optionality for CBDC transactions all over India, the same way you can get access to the internet. And if you look at the different architectures of governments and central banks which are being experimented right now for CBDCs, you see really different layers. So you see the M0 money issued at central banks level, M1, M2, M3. So that's the different levels of distribution of the currency, right? So it means that your network and the reach of your CBDC increases with the number of people which are involved in the distribution. And so far, what we see from central banks is really an inclusive way to distribute currencies. Usually, CBDCs are issued from central banks to commercial bank between M0 and M1 level, and then the commercial banks have the choice to distribute the same tokens to a payment service provider, which will have direct access to more customers, or to some companies leading some kind of point of sales payment terminals. And they have choice to move and pass on the same token from the central banks. But there will be also maybe options. I don't know how things will go in directions in India. Maybe the authorizing some of the regulated companies or payment companies to issue their own token-based currencies if they have enough of the CBDC as a counterpart. So that's a way also to keep some of the deposits within the banks and find new ways to be more inclusive. Money should not be only inside the bank's hands. So there is many ways which are being experimented right now. I don't think anyone have a very strong answer, and anyways, these answers will always be kind of localized because there is a local regulation, there is local culture or local habits. But the infrastructure, honestly, don't worry too much. If the product is right, CBDCs will reach people, and we don't have to rebuild everything for using CBDCs. It's more rewiring things and getting our data consumptions closer to our payment consumptions. And the reality is they are very much overlapping today already quite a lot.
Okay, reactions, please.
So, the technology challenge is not the availability. It is the gaps in basic stuff like electricity. You cannot make a call if you don't have power, but if you're unable to buy food because you have a power outage, then it's a significant problem. And that's the issue with India. There are chunks of, there are areas where there are chunks of unavailability. Power is a problem in many areas. Mobile phone, the basic signal, even a feature phone will not work because there are blackout areas. So what happens to those people? Do they, I mean, if digital becomes the reality, then those people don't get health insurance, don't buy food, don't buy medicines, what? How does that work? That is the bigger challenge. The second is a bit of a futuristic challenge. You see, tokenized DLT-based currencies consume massive amounts of compute and electricity. I mean, Bitcoin, which is such a small currency, is estimated to consume a third of the world's solar power, right? And it's just a tiny, tiny currency. If you take Indian CBDC and put it on blockchain at Indian volumes and Indian transaction levels, you're going to have a significant amount of electricity being burnt up to run it. And we are not sure we are ready for that.
Sankey, if I may interrupt, all the CBDCs we are building today for 6 major central banks in Asia are based on different protocols of blockchains, which are proof of authority. So essentially, they are almost neutral in terms of carbon footprint. It's the equivalent of running 4 different computers. So it's very different from the computing necessary for Bitcoin, which is a proof of work blockchain. So CBDCs can be really neutral in terms of carbon footprint, and in terms of energy, almost forgettable.
No, but carbon footprint is not the same as energy usage. So if you take every transaction and put a digital cost to it, you will have a lot of electricity being consumed if most of your transactions go digital. In India today, only about 30-35% of transactions are digital. If you take out wholesale of course is largely digital. And if that cost does increase, the number of retail transactions does go up dramatically, you will have a lot of electricity usage. And India electricity is not evenly distributed. Some places have a surplus, many places have a shortfall.
Okay, any other comments?
I wanted to make a brief comment. I think, the way I end up looking at it is that indeed we are probably creating a society of digital haves and digital have-nots. So we have to always remain mindful of those who have access and don't have access. However, the way I always sort of end up thinking of this is that at least empowering those who do have that access allows probably the authorities to focus on the have-nots. So to me, perhaps if they can say, okay, those of you who have a smartphone, who have the smart wallets and can engage with CBDC, please go ahead and use it. And we will figure out how to, get the rest of the people into the ecosystem. To me, I would like to look at progress that way, because if we have to all wait for that common minimum being achieved, we will always, be sprinting way behind what the actual markers of technology and progress around the world are.
I agree.
Good point. So we'll have to have some kind of a halfway home solution, I suppose. Which brings us to an end to both the rounds. We've had a terrifically engaging discussion, which makes my job an impossible one. Trying to summarize the erudite comments received around from the panel is, for me, as I said, an impossible task. But I will essentially talk a little bit about the broad conclusions, rather than examine what each of you say and attempt to paraphrase it, except to say, I will talk about my impressions. The impression I got from Shanky is first that he made a lot of cost-oriented points as being important for comparison in the introduction of CBDC, especially in terms of existing mechanisms, both cash and digital, in comparison to what is required or what could be required for CBDC. For which Charles said, look, including energy footprints, availability and cost. And Charles responded that it ought to be possible to find via medias, and the kind of proof of work energy requirement of old crypto coins is not really a requirement for CBDC. So energy may or may not have the same level of footprint. But having said that, the second impression I had from Shanky is he thinks is far more likely, and please correct me, Shanky, if my conclusion is wrong, that this will see, if it sees introduction on the wholesale side prior to its promulgation on the retail side, for some of the reasons that are outlined earlier. Charles, of course, has been through watching these kind of dilemmas in a number of countries. He believes the solution is out there. He believes the use of technology paradigms can help promulgate, and it will enable the introduction of CBDC, if necessary, in a layered way, as far as India is concerned. So far as Pramod is mentioned, he made again the same point that given the diversity of India, there will always be a continuum between the lowest and the highest, whatever class you do. And the need to introduce a mechanism like CBDC perhaps can enable those who are higher up on the continuum to be able to leverage the benefits of that and pass some of that in a different mechanism on to those who do not. And therefore, I would say is kind of supportive of the possibility of a CBDC. As far as Shehnaz is concerned, a critical point she made in the context of the emerging bill, and some of you echoed that it is unlikely to result in the immediate promulgation of CBDC. If at all, it will be an enabling provision to permit RBI to begin experimenting with CBDC in some way, rather than a creation or a outright enablement of creation of the CBDC in the first place. I'm not commenting on the virtual currency bit because that's outside the scope of this panel discussion directly. I'm limiting it to CBDC itself. Besides all this, I think the point that has been made is that it's not going to happen in a hurry. Whichever way it is, it will be watchful because there are cost comparisons, there are inclusion comparisons, there are infrastructure needs. All of these will have to be tried and tested in a step function. So one important function, whichever way it is more than likely that the central bank will introduce it in a graduated fashion for sure, including functionality, including applicability, including even properties, including the people to whom it will be targeted. So I will leave it at that, as saying that we all think something will come, but it will be gradual, it will be smooth, and it will be after a lot of discussion and competition. I hope I've sort of summarized the crucial elements of what is that. I'm sure some elements I would have missed out, to forgive me for that. But I must thank all of you for what has been, in my humble opinion, an outstanding discussion from you folks in terms of where we have headed and where we are moving on a going forward basis. I must, of course, express my thanks to each of the panelists on this roundtable for their engagement, inputs and thoughts with regard to CBDC. I also thank, of course, ETMarkets and all its involved personnel for putting this together. I'd like to conclude by describing the subject of today's roundtable CBDC simply as, quote, a matter of significant currency, pun intended. Thank you very much. Thank you, gentlemen, all of you.
Thank you, Vijay. Excellent summary.
Thank you. Quality time here. Thank you
so much.
Good day to all of you.